What's up everyone, my name's Robbie. This is Robbie in Manila, and today we're trying to figure out how to create a 3-fund portfolio with Vanguard. Okay, so I've made videos on how to create a 3-fund portfolio with Fidelity, how to create a 3-fund portfolio with Charles Schwab. Today's the day that we finally get to do the how to create a 3-fund portfolio with the OG, the Bogglehead approved Vanguard. Before we get into the details, of course, we always want to go through the exact reasons why 3-fund portfolios can be good for some people, and some of those reasons include the following. 3-fund portfolios can help you with diversification. Of course, having all your money in just like one stock is probably not a good thing. Having money in just one index fund can be good too, but there is a problem with having all your money in just one index fund, and it's that while you get diversification, what you don't get is asset allocation. You see, some people want to have money not just in stocks, but also in bonds. And for that reason, well, a 3-fund portfolio can help you because you can have money in domestic stocks, then you can have money in bonds. Now, there's actually a third thing that you might want to have, which is to have money not just domestically, but internationally too. So that way, a 3-fund portfolio gives you more diversification. You're not just investing in the United States, you have some international exposure, and you have some bonds. I hope that was a very quick and thorough rundown of why some people like to have 3-fund portfolios. So let's go ahead, let's figure out how exactly to create this portfolio after the intro. So I'm recording this video and I'm like, why do I not have the Vanguard red in the background for the lights? So now we got Vanguard red for the lights for the Vanguard video. Got that going on. Now I want to make sure that I ask you a question because I always want to hear from you in the comments below. Please let me know what you think of 3-fund portfolios. Do you like them with Vanguard? Maybe you like them with Fidelity and you watched my Fidelity video. Maybe you like them with Schwab. Let me know. I want to hear from you. Okay, so I realized that, I changed the light, but apparently I'm not smart enough to have designed this with the red color in the Excel spreadsheet. Sorry. So we're going to go with the normal colors on this one. My bad. I didn't think that far through. So here's what we got. So I'm going to go over first if you had index funds with Vanguard and then if you have an ETF portfolio. Why would you go with one of the two? Well, with index funds, you can always dollar cost average, at least with most brokers, meaning that you can always maybe auto deposit into an index fund, but you can't usually do that with ETFs. So if you want to dollar cost average automatically without like doing anything, like direct deposit it in there or whatever, then you can usually do that with index funds. So if that's what you want to do, index funds might be the way to go. So how do we do this here? Well, we have first VTSAX, which is the Vanguard Total Stock Market Index Fund. The expense ratio for this is 0.04%. And the thing with this one is that it's only got a 3,000 minimum, but that also could be too much for some people. So because of that, sometimes Vanguard to me is not always the place to go. If you have enough money, then this is totally good for you. But if you're kind of starting out, maybe Fidelity or Schwab could end up being better. And in that case, you might want to watch one of those two videos. Let's go to the next one. We have VTIAX, the Vanguard Total International Stock Index. That would be the, of course, international portion of your funds. And then that's a 0.11% expense ratio or a 3,000 minimum and a 3,000 minimum. And finally, VBTLX, which is the Vanguard Total Bond Market Fund, a 0.05% expense ratio and another 3,000 for the minimum. Okay, so here's the thing. We have these 3 funds. Now we have to figure out how much you need to put into these 3 funds. So it depends on your risk tolerance, how you invest. Some of it, there's a lot of different things. Your age, are you risky? How much time to your retirement? All sorts of different questions. And how do you figure this out? Well, what you do is, I would suggest you go take a risk tolerance questionnaire. Very easy to find one. And I'm gonna put one in the link in the description below, so you can always do that. but we're gonna go check that out real quick here. And this is the investor questionnaire results here for Vanguard. So I already took it, but let's see, retake questionnaire. You go here, you say accept all the terms and conditions. You go through this thing pretty easily. I plan to begin making money from my investments in blank. As I withdraw money from these investments, I plan to spend it over what period of time. When making a long-term investment, I plan to keep the money invested for how long? From September through, okay, this is just about risk tolerance. What would you do if the market lost a lot of money? Generally, I prefer an investment with little or no ups and downs, so that's about volatility. When the market goes down, I sell some or do not sell, things like that. Based on a brief conversation with a friend, I would invest in mutual funds. So do you listen to your friends? Do you listen to guys on YouTube? Nah, come on. From September through 2008, another one about 2008. The chart above, this is showing least volatility, most volatility, and how much you could potentially earn. Current and future income sources, and then things like if you're experienced or inexperienced and things like that. You'll take this test and you're going to come back with a certain amount of portion of how risky you are. So I took this test and the way I came back was that I am considered to have someone who should probably have 80% in stocks and 20% in bonds. So that helps us solve some of the puzzle here. So how much should you have in stocks? How much should you have in bonds? Well, I at least know that I need 20% in bonds. So let's go back to the index funds that we're going to use for Vanguard. So here I know that VBTLX, the Vanguard Total Bond Fund, I am just going to put 20% in that for myself for my risk tolerance. But what this doesn't tell you, the risk tolerance questionnaire that I just did, it does not tell me how much I should have in these two different funds. I know that I need 80% total between these two, but how much goes into the total stock market and how much goes into just the international stock index? So I need to figure this out. And what I usually say for myself, and maybe if someone asks me, is the following. I would do a simple calculation, get the calculator out, and I would just put 20% of my 80% into the international fund, and the other 80%, I would put into the total stock market. So for me, the 80% should be in stocks. Now I'm going to multiply 80% by 0.08. And so that's going to give me 64% of my money should be going into the total stock market fund. Then I'm going to take 80%, multiply it by 0.2, and that's how much I'm going to put into my international fund, which is 16% of my portfolio. And so that's what I'm going to do. So if I had $100,000, then $64,000 would be going into the total stock market, $20,000 would be going into bonds, and then $16,000 would be going into the international. Okay, so that answers the question of how to create a three-fund portfolio from how much money would end up going into which of the funds. Next question is, what ETFs could you potentially use if you want to use ETFs instead of index funds? Well, you could use the following. So you could use VTI, the Vanguard Total Stock Market ETF, has an expense ratio of 0.03, and it does not have a minimum. So this is where we need to kind of ask some questions. Next, we have VXUS, the Vanguard Total International Stock ETF, with a 0.08 expense ratio. Again, no minimum. And then you have BND, Vanguard Total Bond Market ETF, 0.035% expense ratio. Again, no minimum. So here is the next question that we need to ask ourselves. We know it's more expensive to have the index funds with Vanguard than it is to have the ETFs. A bit more. And people who usually invest in three-fund portfolios, the bogglehead investing type of people, they don't like to pay high fees, right? They want the lowest expense ratio possible. But at the same time, a lot of these people also would prefer to have their money kind of automatically invested so that they don't have to do it. It just goes into it. It's like a lazy way of doing it for a lazy portfolio, because a three-fund portfolio is lazy. On top of this, there's no minimum, so you can have any amount of money and put it into the ETF side of this thing. So I'm going to let you decide on what you want and what's best for you, but in general, if you're okay with adding the money every month, then maybe the ETFs are going to be better. It's going to cost less money and an expense ratio standpoint, and there's no minimums. So finally, at the end, we have my mix of investments that I would have in my personal 3-fund portfolio with Vanguard, and it would look like this. Like I said, VBTLX 20%, VTIAX 16%, and FTSAX 64%, again, for my personal risk tolerance. And then on the ETF side of it, if I wanted to go with ETFs, it would be BND 20%, VXUS 16%, and VTI 64%. So I hope this all helps you. I hope it helps you create a 3-fund portfolio. I think it's a great way to invest for a lot of people, not everyone, but a lot of people. And you know what? If you like this video, please hit the like button, subscribe if you want to see future content like this, and I got another video coming up. You should probably watch it. It's coming up on the end screen right now.